all the reports of the examiners and the comments of the directors and deputy governors, I am satisfied that these 5 institutions are in a grave situation and that their managements have acted in a manner detrimental to the interests of their depositors and creditors.
It was this announcement that would dramatically transform Nigeria's banking sector. After trying to address the impact of the global financial crisis as well as local governance issues within the local banking arena in 2008, the central bank had to take some extreme measures to stop the banking sector, which makes up some 45% of the country's stock market capitalization, from collapse. And step 1 for the new central bank governor, Sanusi Lamido, was a special audit of 15 of the country's 24 banks. 10 banks passed but were asked to make special provisions for non-performing loans. But 5 other banks weren't so lucky. Afribank, Oceanic Bank, Intercontinental Bank, Finbank, and Union Bank were all critically undercapitalized. The CBN took drastic action, expelling management and injecting emergency financial support into these banks. But 2 months later, 5 other banks were bailed out. In all, the central bank rolled out $4 billion in emergency funding for these banks. And yet again, another set of top bank executives were relieved of their duties and forced to answer to a long list of charges surrounding activities at the banks under their watch.
They fall in 2 or 3 broad categories. One is in terms of lending practices, fraudulent loans, insider loans, reckless loans, loans granted without collateral. The second category relates to capital market abuses, price rigging, manipulating their shares on the capital market, funding the purchase of their own shares.
Now a year on, the Nigerian banking sector landscape has undergone a major shift. The likes of Intercontinental Bank and Oceanic Bank, which ranked in the top tier by assets prior to the CBN's intervention, have given way to a new set of banks to join the top cadre of the banking industry. As the market gradually returns to normalcy, banks are beginning to report profits again, in a tough environment after recording record losses in 2009.
Well, in general, capital adequacy dropped immediately after the audit. I think it's remained relatively stable. 1 or 2 banks have attempted to raise money, but I think the adequacy ratios are healthy for the industry as a whole. The AMC would help, and that we expect will bring NPLs to 10%. And once that happens, the deposit books are doing very well, but the average cost of funds in most banks has probably dropped by 50% or more.
New regulations such as tenure limits for CEOs designed to prevent a repeat of the crisis have come out over the last 12 months. While these regulations have their critics and supporters, there's a growing feeling that intervention was inevitable and new rules were vital in preventing a reoccurrence of past abuses.
And also to prevent banks from using sort of structured deals to dress up their balance sheet. You remember one of the first regulations they did was to make bankers' acceptances and commercial paper on balance sheet liabilities. You could not do them off balance sheet as well. Then from there they come up with tenure limits for CEOs, because they felt that some of the problems they saw in some of the rescued banks was attached to perhaps overbearing CEOs who had effectively compromised their whole credit approval system. So everything really happened in the CEO's office.
Critical to the success of the sector is the operations of the Asset Management Company of Nigeria, otherwise known as AMCON. The law supporting this organization was ratified by President Goodluck Jonathan last month. AMCON aims to remove bad loans from the bank balance sheets and recapitalize rescued banks. But there are some who see challenges in getting AMCON going.
Perhaps the biggest unknown is who is going to run AMCON. Today you have an enterprise that will have the capacity to do at least 1.5 trillion of expenditure. It's been signed into law. Who are you going to put on top to run that? What's the integrity of the board of AMCON? How would they decide which assets to buy and which one not to buy? That's going to be a big challenge in a country like Nigeria, where corruption, the stigma of corruption, is always there, pervasive.
The task of selling the rescued bank lies ahead. Shareholders, including expelled management of several banks, must endorse any sale. And given the dramatic and highly publicized manner of their dismissal, this is not likely to come easy. But that's not stopping several major lenders from South Africa, emerging market funds, and a few local banks from scouting the industry for acquisitions and access to sub-Saharan Africa's biggest economy. But still, it remains to be seen how quickly a deal can be done, and perhaps even more critically, when banks will begin to lend again.